Hey, what's up everyone, and welcome to the School of Personal Finance. In today's video, we're going to talk about the most popular mutual fund in the universe, the Vanguard Total Stock Market Index Fund, or VTSAX, as all the cool kids call it. So we'll look under the hood, we'll see what this fund is made up of, we'll talk about why it is so popular out there, especially in like the FIRE community, the financially independent retire early community. So we'll take a deeper dive what's in the portfolio. We'll do a little comparison to the S&P 500 Index Fund, which is the second most popular index fund in the universe. So I hope that you find this one helpful. Let's get to it. Before we get started, make sure to head over to schoolofpersonalfinance.com, sign up for my newsletter, check out everything that I have going on. I'm on a mission to help as many people in this world as I can become great with their finances. So please go check it out. Just to throw my disclosure in here, this is for educational purposes only. This is not financial advice. I'm not telling you to go out and buy the Vanguard Total Stock Market Index Fund. This is not sponsored by Vanguard. I have no affiliation with Vanguard, just for educational purposes only. So let's start out talking about why the Vanguard Total Stock Market Index Fund is the most popular mutual fund in the world. And it's actually pretty simple. Two main reasons. The first one is it has very low cost. So the expense ratio is very low. It's 0.04%, so 4 basis points. So for every $100,000 that you have invested in this mutual fund, you pay $40 in fee. And when it comes to diversification, just by buying this one fund, you get exposure to the entire US stock market. So inside the Vanguard Total Stock Market Index Fund, there's about 3,800 different stock holdings, and they are market cap weighted. Jack Bogle, the founder of Vanguard, he launched the first index fund, the S&P 500 index fund, back in 1976. So they were really the inventors of the index fund. So for do-it-yourself investors that want to have broad diversification to the US stock market, they want to have very low expenses, and they want to be with a very reputable company where they can sleep well at night, then the Vanguard Total Stock Market Index Fund, it is the cream of the crop. And that's why it has over $1.3 trillion invested in it as of today. All right, so this is Morningstar. Now we're gonna go through, I'll touch on the important points because there's a ton of information in here. So where I wanna start out is by bringing to your attention that these are Admiral shares. All right, so you want to make sure that you are buying the Admiral shares and not the investor shares, because the expense ratio is much more on the investor shares. All right, the appealing thing about the investor shares is there's not a minimum to invest to get started. With the Admiral shares, you can see right here, the minimum investment is $3,000. All right, and then if we look above that, we have the expense ratio. So that's where we have this 4 basis points, or 0.04% right there. And this right here, this is the trailing 12-month yield. So the yield on this fund is 1.61%. So that is the dividend payments, the distributions that the fund has made over the last 12 months. It's 1.61%. Turnover, that's how much they are trading inside of the fund, how much turnover there is, buying and selling of individual stocks. And you can see here, large blend is the category, right? So a majority of the stocks in here are large cap blend companies. Some large cap growth, large cap value, but this is considered a large blend is the investment style. And you can see it's a gold rated fund. It has 3 stars. Now, I don't put too much weight into the stars with these Morningstar ratings, but that's what they give it, a 3-star fund with a gold rating. And you can see here the process, the people, the parent, they have, their whole rating system that they use, and all of them are green, above average, high. I mean, Vanguard, they've been doing it forever. They're really a great organization in general. So now another thing that I want to mention is with mutual funds, they are different than ETFs. So an exchange traded fund, those trade like stocks on the exchange. Like if the market's open, you could go right into your Schwab account or Vanguard account or Fidelity account, and you could buy the Vanguard Total Stock Market ETF. The ticker for that is VTI, all right? And that trades like a stock. For the mutual fund, for VTSAX, it's a little bit different. Mutual funds, they settle at the end of the day. So all the trades are placed after hours at the end of the day is when your buy or sell orders go through with mutual funds. So in the middle of the day, if you wanted to buy this fund, you would place an order and then you would get whatever price it closes at the end of the day. So it's a little bit different. And also with mutual funds, you could buy any dollar amount. So if you wanted to set it up where you do $100 a month into a mutual fund, it is very easy to do that. Where Where with ETFs, you actually have to go in and place the trade in your brokerage account, and then you get into, can you actually buy a full share, and does your broker offer fractional shares and things like that. So in your brokerage account, you might have to wait until you have enough money in there to be able to buy a full share, where with mutual funds, you could set it on a specific dollar amount, and have it recurring. Well, they'll buy you that amount of shares, according to that dollar amount. So it's a little bit easier with a mutual fund to do like the automated investing every week or whatever the case may be. All right, so next let's go over to the portfolio tab and we'll look at what's under the hood of this fund. All right, so they break it down by asset class. So you can see that it's really all US equity, right? There's a little bit in cash, a little bit non-US equity, but not enough to move the needle at all. All right, and then this chart right here, this shows, so the blue is the Vanguard Total Stock Market Index Fund. And you can see the little circle right here, and then you see this outer circle here. And they're comparing it to a regular large blend index fund and then a Morningstar index. All right, so now you could see that this blue, it comes down here, which shows that this fund has a little bit more exposure to mid and small cap companies than its peers. And we could even look at the weight of it here. So majority of it is these large cap companies, and you're gonna know the names of pretty much all of those companies, right? And then we get into the mid-size and the small cap companies. So you can see there's only 8% of the overall fund that is in small cap, and there's 20% that is in mid cap, with the remaining in these large cap funds. And the biggest is large cap growth, right? And that's because those are the biggest companies in the world. So we could also see, the price to earnings ratio and then the category average here, right? As we continue to scroll down, we could see the exposure to different sectors inside of here. So as you can see, technology, right, 27%, almost 28% of the fund. And they compare it to, the category, to what the index funds, their peers, what they have as well. So pretty much on par. Industrial's a little bit less, but nothing really jumps out, right? This is representative of the whole US stock market, and it is market cap weighted, okay? So as we look at the number of holdings in here, 3,788 holdings, all right, that are equity holdings, and then these 8 other holdings. So basically, we're right at 3,800 individual stocks inside of the Vanguard Total Stock Market Index Fund. And now this one is interesting, right? So 27% of the assets are in the top 10 holdings that they have. So as you could see, here are the top 10 holdings, right? And their names that you know. So Apple, Microsoft, Amazon, Nvidia, right? And these are the percentages that they have in there. So when you buy this fund, then your biggest holdings, those are the companies that you are basically buying. All right, so now let's go over to the performance tab over here, and we'll look at this. So now here is the growth. If you would have invested $10,000 into this fund, back starting in 2013. So $10,000 over the last 10 years, it would have grown to $37,062. And compared to the category would have grown $31,646. That's compared to its peers. All right, and then you could go year by year. So you could see last year it was down 20%. So obviously, this is invested in the stock market. You're gonna have volatility. You're gonna have ups and down years. As we could see over the last 10 years, the market has been pretty damn good. And I would caution you that you cannot expect it to be this good going forward. We just don't know what the future has in store. But if we look over down here, trailing returns, 10-year returns, a little bit over 11%, 15-year returns, over 14%. So that is higher than history, right? So you would think that we will revert to the mean at some point in the future, and that we will not have the growth that we've had over the last 15 years for the next 15 years. But again, that's just my opinion. Nobody knows what's going to happen, right? And as you can see, the smart thing to do is to just stay invested, right? It's such a great investment plan to just buy a fund like this and just continue to add money. As you get paid throughout your life, you just add money to it each and every year to grow your net worth. This is an ultimate set it and forget it type of fund where you don't really have to worry about it, right? It might be too aggressive for some people if you have a high risk, if you don't have a high risk tolerance and you don't like the volatility, then maybe you want to add some bonds or some CDs or whatever the case may be to smoothen out the ride a little bit. Like as you can see, we've had some very large declines throughout the years in here. some big drops. I mean, we lived through 2008, 2009, where the drops were bigger than anything that you're seeing on this screen right here, right? But 2020, we had the COVID drop, right? We had a pullback 2022, but for the most part, this chart has been nothing but up. But history, it doesn't work that way, right? We have some years where we have 40% declines. We had the lost decade where basically the market went nowhere from 2000 to 2010 after the Great Recession happened. So you can't expect 15% annualized return each and every year. All right, so now let's do a quick comparison to the S&P 500 index fund, the Vanguard S&P 500 index fund, which is the second largest mutual fund in the universe with $852 billion in assets. So as we can see, a lot of things look very similar, right? The expense ratio is the same, 0.04, a large blend, right? The yield is the same. The turnover is actually a little bit less in this fund. Let's go and we will look for both of them at the portfolio. All right, so once again here, this looks very similar, right? The only difference is you can see the S&P 500, right? This blue line does not go down this far. There's really no small cap exposure at all inside of the S&P 500 index fund. There's a little bit of mid cap exposure, but no small cap. So if we look at the weight right here, you can see zeros for small cap, and here's the mid cap. If we look at the weight back on the Vanguard Total Stock Market Index Fund, you can see the differences here. So more in the large cap, right? More growth, but there's no small cap exposure at all in here. So usually if I'm using an S&P 500 fund, if I'm managing money for somebody and I'm using an S&P 500 fund, I am pairing it with a small cap fund as well, usually a small cap blend fund, right? And then if we look at the bottom down here, total holdings, so the S&P 500, 507 holdings, right? And 31% is in the top 10. So let's bring this up, and they look very similar. So now in the S&P 500 fund, Microsoft and Apple, they are the same weight. They're both 7.12%, right? And then we have Amazon, Nvidia. So all the holdings, it's identical in both of these. The weighting is a little bit different, right? There's a little bit more in the S&P 500 because again, there's less holdings in here and they don't have as much of the mid cap or any of the small cap stuff. But overall, these funds, performance-wise, they're going to look very similar because they are very similar, right? It's just the only difference is the total stock market index fund that gives you more diversification where you have more of that mid and small cap. So let's actually go look at the performance for both of them and we will compare it. All right, so since 2013, you could see growth of $10,000. It's actually been a little bit better with the S&P 500 fund, right? It would have grown to $39,020 compared to VTSAX, which is $37,062. And I think there's a pretty good reason for that because large cap growth has really performed better than anything else over this time period where small and mid cap has not performed as well. So that doesn't mean that it's always going to be that way though, all right? Just because the past has been that way, right? Past performance is not indicative of future performance, right? Of future results. So just because that is the case, that doesn't mean that it will go on forever. But you could see year to date, the S&P 500, it's up just about 20%, where this one is up 18.5%, right? 2022, it was down a little bit less than the Vanguard Total Stock Market Index Fund. But overall, they are very, very similar. And when you're starting a portfolio, either one of these, they are a core holding, right? This is a great way to have a bulk of your investments inside of a retirement account where you understand what is going on, right? You could turn on CNBC at any point and look at how the stock market is doing, and you know that these funds are going to be following that, especially with the S&P 500, right? Because you just look at how the S&P is doing, and this S&P 500 index fund, it is going to mimic that. But they're just a great starting point to build your portfolio, and you could keep these funds forever. It's not like you have to worry about swapping them out for something different. You know what you're getting with these funds. All right, everybody, that is it for this one. I hope that you found it helpful. Remember, this is not investment advice at all. You have to make your own decisions. If you did want to work with me, if you wanted my opinion on anything, feel free to reach out to me. Go over to schoolofpersonalfinance.com. I show all the different ways that you could work with me over there, and I will see you again in the next video. Thanks.